Hello, friends, and welcome to Big T's 3-Minute Market Minder. What I want to do is a quick video on why we are seeing a sudden rush of weakness in the cryptocurrency market right now. It all has to do with this probe into manipulation that the CFTC is rolling out. You see, the CFTC needs to make sure that the data that they are using to build their Bitcoin futures contract is clean. They've approached several different exchanges for their data, and they were stonewalled. And they said, okay, what's going on here? Why don't they want to share their trading data? And so they've decided to launch a huge probe into manipulation in the cryptocurrency market. Now, anytime any regulatory agency thumps their chest, the cryptocurrency market sells off. It's been doing this since I've been actively involved in 2016. First, it was the Chinese, and then it was the SEC, then it was the IMF. Anytime any regulatory agency looks at the market, everybody throws up their hands in the air, they panic, and they sell. That's a mistake. What the CFTC is doing is in the long-term best interest of this market. You cannot have a market where pension funds and institutions are going to be involved where you can't trust the pricing data. And so I saw something very similar to this take place in the NASDAQ market in the early 90s. The NASDAQ market used to be rife with fraud and manipulation. And that's why the spreads on the stocks were huge. If anybody was around in the late 80s and 90s in the markets, then the average stock on the NASDAQ would trade with a $0.50 spread. So it would be 7.5 bid, 8 offer, and you'd have to pay $8. And then the brokerage firm, the exchange, would get that 50 cents. They'd even take it a step further. Sometimes they would, a firm would take principal risk, buy the stock at 7.5, and then manipulate it to 8.25, print it at 8.25, hide a 75-cent commission, sell it to you at 8.25, and then charge you another 5% commission that they'd show you on top of that. And that happened for years. And so that kept a lot of institutional money out of the NASDAQ market. They used to call it the under-the-counter market because it was so shady. So when they started cleaning it up, there were some smaller firms that screamed and yelled, ultimately went out of business. But now when you trade on NASDAQ, you trade in penny spreads. People would lose their mind if you had a spread of 50 cents or 75 cents, right? It would be outrageous. And so that maturing of that market, you can trace directly back to greater enforcement by the regulators. So this is ultimately a good thing for crypto. Just over the short term, it's a negative, but it's a negative that we've seen many times before. Now, on top of that, the other thing I want to talk to you about is institutions. We are seeing just a rapid adoption of this asset by institutions. Now, when I say rapid adoption, what I mean is that we are seeing institutions create the framework that they can actually start getting involved in this market. So I'll give you a few examples. Coinbase, one of the largest exchanges in the world, just launched a private index fund that will hold a collection of cryptocurrency. And you can see here, we've seen overwhelming interest from investors. And so this is going to be open to wealthier investors. Minimum investment of $250,000 up to a maximum of $20 million. On top of that, Coinbase is now going to become an SEC regulated broker-dealer. So again, just like the early 90s, right? Shops that were maybe doing things that were a little off or a little wrong, they had two decisions to make, right? Either quit or get compliant. And so Coinbase is getting compliant. Now, the even bigger announcement in terms of what proves to me that institutions are getting ready to come into this market en masse is Susquehanna. Now, Susquehanna is one of the largest financial firms in the world. They trade everything: stocks, options, exchange-traded funds. They're a privately held company, and they just announced that they have created their own cryptocurrency trading desk. They're going to start trading Bitcoin futures, Ethereum, Bitcoin Cash. They've even created their own custody solution, built their own systems for storing cryptocurrencies. Now, this is the key takeaway. They said, we believe that this technology and asset class is going to change some facet of financial services, and we think it is going to exist forever. Now, Susquehanna are not a bunch of anorak-wearing programmers hiding in their mom's basement, right? These are hard-nosed businessmen and women from Pennsylvania that have a multi-billion-dollar firm that if they never touched cryptocurrencies ever, they'd still be smoking cigars and flying around in Lear jets, right? Their company is incredibly profitable. The fact that they are making this move into cryptocurrency is incredibly telling that a company as conservative as Susquehanna sees the opportunity. They're creating a trading desk and creating their own solution for storing cryptocurrencies. So we are going to see more and more of this occur throughout of the year. And that's what I want you to focus on. I want you to focus on, okay, is the ball being moved down the field for institutions to come into the space? And if that answer continues to be yes, then the appropriate response from you is to just ride out the volatility. Because as big as a move up as we saw in 2017, it was driven by individuals, not institutions. When we get institutional money coming into this market, Mike Novogratz, a billionaire hedge fund manager and one of the early guys who got involved in Ethereum, he believes you are going to see this market hit a $20 trillion market cap. Today, the market cap is around $274 billion. So we still have so much more upside ahead of us. It's certainly been a bumpy ride so far this year. It's going to continue to be a bit bumpy. What you got to do is just unhook from the day-to-day prices. Just enjoy your family, enjoy your summer, and trust in the fact that some of the smartest men and women in the financial services world are getting ready to build the framework that will bring trillions of dollars of institutional capital into this market. All right, friends, that's almost everything that I have to say. One last thing I just want to remind you of. I don't know if you've seen any emails about this, but on January 14th at 8 p.m., we're having a very special event from a gentleman that I met in Miami. This is a guy that used to run the derivatives desk for a major Wall Street firm. He's a brilliant guy. He has found a way to track some of the biggest capital in the stock market. Some of his results are just incredible. I mean, they're just incredible. Some of his market calls that have been purely data-driven, he'll send me an email. He'll say, hey, T, this is going to happen. Watch this. Bang, it happens. T, this is going to happen. Watch this. Bang, it happens. The guy is like a maestro of equities and just got an incredible background. I strongly urge you check out his message. He's got an event going on June 14th, 8 p.m. There should be a link somewhere here on this page. Click it, sign up, show up, and check him out because he is the absolute real deal. All right, friends, that is enough out of me. I will catch up with you in the next video, and I want you to always remember, let the game come to you.